And the fact is that getting those businesses from companies that were in lockdown in April because they weren't essential service businesses, or alternatively because they decided they didn't want to train, or rather didn't want to open, or in fact those companies that are now opened after having been in lockdown. A couple of things have been realized by the people running those businesses. Number one, either that their turnover has diminished hugely, irrespective of whether they're open or not. And number two, that possibly they had too much fat to begin with. And when I say fat, I'm talking about employees. I'm talking about the numbers in terms of labor rather than in terms of productively doing business, sometimes with equipment and machinery as a replacement for labor. And I know what many of you are going to say to me. You're going to say, how can I, in South Africa, which has a real unemployment rate in the region prior to COVID of in the region of about 35 to 40%, and now with COVID, most probably between 50 and 70%, how can I be advocating a labor replacement strategy with a workshop such as this? Well, let me say right from the very beginning, I represent companies. I've always represented companies. My objective is to help companies be productive, get productive, remain productive. My objective is not to act as a trade union or represent the interests of employees. And I'm being absolutely and open and honest about that. However, having said that, one has to be fair, one has to be honest, one has to be transparent. And obviously, in a country such as this, one has to be caring about the fact that on average, there is a ratio of 9 dependents for every one person who has a job of some sort or another. I must say that after yesterday and today in particular, and the fact that I have between yesterday and today attended to 7 companies on average employing 150 people, and seeing what trade unions are prepared to do in terms of instigating illegal industrial action, and I'm talking across in a 2-day period across 7 different plants, I must say that I'm very quickly coming to terms with the fact that employers and employees live on 2 completely different planets. The opportunity for engagement possibly is not there any longer, to the extent that it might have been there 10 or 20 or 30 years ago when, for example, COSATU was first formed. And the reality is that from an organized labor perspective, there is no focus on productivity. There is absolutely no focus on cost-effective strategies. And to be honest, I honestly believe that many trade unions have lost the plot, and many trade union leaders are simply auditioning for positions in parliament. And because of that, I am saying that as a business, you have to make a strategic decision. Do you follow a labor intensive or a capital intensive policy in terms of where you take your business to from here, and how and whether you want to grow your business or not? And there is an argument for you being a socially responsive company, a socially responsible company, to the extent that you're prepared to sacrifice productivity, you're prepared to sacrifice profit, you're prepared to take food off of your own table from home, to sacrifice it for the common good. But then you're a communist, you're not a capitalist. And this presentation today is very much not a socialist or a communist presentation. It is very much based on the fact that we still live in a capitalistic system, irrespective of who and what our government presents in this country. I say this not to grandstand, but I say this to justify what is going to come in the course of this presentation, which is a no holds barred approach to determining what is best for your business as the owner of your business, as the person who's responsible for those sleepless nights, for those cash flow challenges, for dealing with the banks on overdrafts and on loans, for meeting across the table with a workforce that doesn't want to understand the challenges you face as an owner in a business in this time in South Africa, or maybe is being instigated not to understand those factors. Obviously, the truth and the reality of your humanity lies somewhere in the middle of everything I have said. Please feel free to put anything you want on the chat line. And also, please feel free to unmute your microphone and to ask questions or make comments at any moment in time. So, as you move into a consideration, ladies and gentlemen, for whether or not you should be thinking about downsizing your workforce, upscaling the capitalization factor in your workforce, these are your strategic considerations. Number one, if I have a workforce of 200 people, can I get away with 50 people with good machinery and equipment? Or do I have an obligation to those people and to their families and to the country as a whole to sacrifice the benefits of capitalization for the benefits of a labor-intensive manufacturing process or corporate philosophy? Your next strategic consideration is, am I downscaling for financial reasons or, in fact, for operational reasons? Because those reasons are different. If I'm looking to downscale my workforce for operational reasons, it means I have looked at my operation and I've looked at every division and I've looked at every process and system within my business, and I've determined that some of those functions are not productive with the labor capital balance that I have at this moment in time. That they might be more productive with mechanization, with technology, rather than with the concentration of people that I have in that particular division. Perhaps never before and never again am I going to get the opportunity to say that the reason I need to downscale and reduce the number of people in a particular division is social distancing. But certainly for the next 6 months to a year, I will have that opportunity. And so social distancing becomes an operational consideration. Social distancing could justify why, instead of 20 people in a particular space, I might only want 15 people in that space, as long as they can remain productive or possibly be more productive. And if I need to get rid of 50% of a workforce in a particular space and replace them with machinery and equipment, which over an acceptable period of time I can have recovered the cost of the financial outlay for the machinery and equipment for, I'm entitled to make that decision anyway for operational reasons. But in the time of social distancing, I might even have more of a justification for, in fact, doing that. From an operational perspective, one of the things you could consider is that this whole argument about mechanization and technology in the workplace causing jobs to be lost is most probably going to be offset and balanced by the notion of the big grant, the basic income grant. It's called BIG, B-I-G. The basic income grant, which is a global phenomenon that's currently being debated. It's something that was asked for by Mark Zuckerberg, Bill Gates, Elon Musk. In other words, the inventors of technology, the guys introducing technology to the workplace all over the world have said to governments, because our technology is going to cause job losses, you, the governments, must compensate those people who are going to lose their jobs by a big grant, a basic income grant, which will in fact become a dole. It will convince them to stay at home. You'll pay them to stay at home. Ironically enough, we have seen the introduction of a big grant under the guise of the COVID TER, Temporary Employee Relief Grant, because it's the temporary employee relief which is a precursor to what will become the basic income grant for South Africa. It will come out of the UIF until such time, presumably, as the UIF run out of money for that purpose, and then most probably be supplemented by government. So if you had to ask me, is TERS going to disappear? My answer would be, I think TERS is here to stay, but it will go through an evolution, and it will eventually become a basic income grant, which says to people, if you can't get a job, if you're unemployed, you're going to stay at home. We're going to give you a certain amount of money to do that with, because of the fact that you can't get a job, but you need some kind of income to survive on. Now, all of those are factors when you consider whether or not you want to take the operational leap of faith and say, for my business to be more productive, more economical, et cetera, in laying people off, I can balance it with the notion that there might be a big grant on the one hand, and from a productivity point of view, there are so many benefits for me as a company. If my decision is financial, I always have to bear in mind that a strategic consideration is that I am at some stage to somebody, whether it's a trade union or a bargaining council or a CCMA commissioner or in labor court papers, depending on who and how and when I'm going to be challenged. If my decision to downscale is financial, I cannot afford to keep as many people as I currently have employed on board then I have to realize I'm going to have to back up my assertion with a certain amount of fact, with my annual financial statements, with my management accounts. And in that regard, I'm going to need to be aware of the fact that people are going to have an opportunity to scrutinize my books and to ask questions about my books in terms of how I define productivity, how I define profitability, and importantly, where my money goes in terms of the distribution of income in the business. So a financial reason for downsizing will always bring with it the notion that my books will have to be transparent, or at least the set of books I want to show will need to be transparent to the extent that people will be entitled to scrutinize those books. And always remember, when you make a financial decision for downscaling, your employees become your most important preferential creditor. They become more important as a preferential creditor in your business than, in fact, your suppliers or your landlord, or even your own loan account in the business might be considered to be a preferential creditor in that business. And in that process, as a preferential creditor, always bear in mind that the preferential creditors have a right to scrutinize the financial books and the financial considerations in your business. So the duty to disclose financials, where downsizing is as a financial decision rather than an operational decision, is always far more intense than if in fact it was operational. From an operational point of view, if you make a decision to have an operationally justified downsizing, then your duty is not so much to disclose financials as it is to disclose operational structure. Your employees, in fact, in both financial and operational, your employees are always allowed to assert the notion of the first right of option to reapply, which means that if you are downsizing and you are doing away with job categories, or you're combining job categories, but you're not getting rid of an employee for reason of competence or behavior, in other words, for any performance management reason, then your employee, if they assert, and they have to assert during the negotiation, they have to ask you, please give me first right of refusal to accept a position should it open up in this business. But if they assert that and insist on that, and it's part of a retrenchment agreement, if you have the positioning opening up again within a period of time, and the right of recall can be 6 months or a year, sometimes 18 months, but a right of recall means you have to always offer it to the people who have been retrenched before you offer it to anybody out there. So always understand, whether it's a duty in terms of financial decision or an operational decision, the right of recall could sometimes stymie your strategic reasoning for wanting to retrench in the first place, wanting to downsize in the first place. But basically, the rule of thumb is you have a duty to disclose financials. If your reasoning is financial, you have a duty to disclose operational structure into the future if your decision to downsize is a operational decision to downsize. And then finally on this slide, I have put down there engagement and consultation versus negotiation and a duty to consider. And so, ladies and gentlemen, what you have to bear in mind here in terms of this particular issue is that we are talking here about, sorry, I just have a problem on my screen that I just want to quickly see if I can deal with. There we go. We are talking here about the fact that during a Section 189 process, which might lead to retrenchment, there is an obligation on you, the employer, to engage and to consult, not to negotiate. And importantly, where you don't necessarily have a duty to consider and act upon that consideration. So this is very, very important for you to understand. Strategic consideration in downsizing is there is a duty to engage, a duty to consult, a duty to ask for reasoning, but not a duty to negotiate, where you have a duty to consider and act upon what the other person or the other side is proposing. And from a legal perspective, that is a world of difference. I'd like to know what you think. I'd like to know what your suggestions are. But I reserve the right to act on my decision, on my instinct, on my knowledge, and on my experience, whether or not you've made other suggestions which might in some fora be considered reasonable or not. Before I carry on, are there any considerations or any questions anybody wants to raise in relation to strategic considerations when downsizing? Okay, remember you can unmute your microphone if you need to. Yes, sorry, it's Jaco, right?
Yes, I was sorry, I just missed a bit. I was distracted when you talked about TERS. What did you say about when do you think that's going to stop or something along those lines?
Okay, so what I said to you is this, that TERS is a mechanism, is a precursor of what is being called around the world the basic income grant. Now, the basic income grant is the equivalent, I suppose, of what in our minds could be the dole, but is basically where government pays an individual, for example, in the UK, a furlough, which is 80% of their normal salary, to stay at home during the lockdown. So TERS is a precursor in South Africa. Temporary employee relief as a result of a temporary layoff is a precursor in South Africa. It is paving the way for a basic income grant in South Africa. And the reality is now that we have a population which is almost to a man or to a woman dependent, almost addicted to the idea that I will stay home, but when TERS is working properly, and I put that in emphasis, when TERS is working properly, I will be paid at least a percentage of my salary to stay at home. Now that is it's a conditioning mechanism. The South African community, South African civil society is being conditioned to be paid to stay at home, essentially not to work, but to be paid in the process, not their full salary, but a component of their salary. And it is a precursor to what around the world is being referred to as a basic income grant. A basic income grant is essentially going to have to be more than the temporary employee relief. But with the unemployment figures in South Africa rising, they were rising before COVID. Government said they were 29%. In reality, they were closer to 40%. 40%, 4 out of every 10 people who were capable of working in this country are not capable of working, were not being employed in a registered workplace because of unemployment in this country before COVID. That is going to rise to in the region of 6 out of every 10 people in the short term because of COVID, but also in the medium to long term because companies are going to want to use this opportunity, use COVID if you want as an excuse or a justification or a rationale to get rid of some of their workers and maybe capitalize and introduce capital equipment, mechanical equipment, technology to replace those people. And we'll talk about why in a minute. So the reality is what is temporary at the moment in terms of the temporary employee relief scheme is going to become permanent. And the reality is as well. Remember, next year we have an election. And the reality is when we have an election, the first political party which campaigns on the basis of introducing a permanent basic income grant in South Africa, the equivalent of a dole in South Africa, to pay people who are unemployed something. And we're not talking about 350 Rand here. We're talking about, on a sliding scale, a minimum of 3,500 Rand all the way up to 6,500 or 7,000 Rand, as currently is the case with UIF TERS. And I'm saying to you that TERS is here to stay as a basic income grant in South Africa to compensate the number of people who are unemployed and the number of people who will become unemployed for a variety of reasons, not just COVID, into the future. So Jaco, I'm not saying to you that that's government policy, but I am saying to you, watch the space in terms of politicians who campaign on the idea that if you vote for me, if you elect me to parliament or to local government or wherever, I will work tirelessly to campaign for a basic income grant on your behalf. That is the politician who will be elected. That is the political party that will take over governing this country. And so watch the space in terms of what the ANC, the DA, the EFF say. because the reality is that that ball has already started rolling with temporary employee relief now having been rolled out by the UIF, essentially by the Minister of Labour. Jaco, I hope I've answered your question, sir. Okay. Any other questions?
Arthur? Arthur?
Yes. Yes, Clive, yes.
I have a question. Clive, how's it?
All right, and you, Clive?
Good, thank you. Just on your engagement in consultation versus negotiation, are you saying that in the engagement and consultation, you're basically going in there and telling them this is what we're doing and there's no room for negotiation? Wouldn't it automatically lead to some form of negotiation?
I am saying that there's a difference. The difference between negotiation and consultation is this. In consultation, I need to tell you what I'm thinking of doing. I need you to tell me why it's not such a good idea. I need you to give me alternatives. I then turn around to you and I say, I hear what you've got to say, but I want to go with my original way of thinking. That's consultation.
Okay.
Negotiation is on a balance of probability. If you don't like my answer to you, so I say I want to lay you guys off, and you come back and say, well, I'll tell you what, we'll each take 25% income drop so that you don't have to lay any of us off. And if I say to you that's not good enough to me, but you've proven to me during the negotiation period that looking at the bottom line, the financial bottom line, it will do the job. But I say to you, I'm not interested in your solution. I am still going to retrench. Well, it's not retrenchment, because remember, retrenchment, there's no duty to negotiate. But if I did say that you, in a negotiation situation, you would be entitled to appeal against my decision and take my decision on appeal. But there is no such entitlement during a Section 189 process. The test is, was I reasonable in rejecting your proposal? Not, did I have a duty to accept your proposal if it made better sense than my own proposal?
Okay.
So well, it's not. It's a very fuzzy line, but that line is a duty to accept what you're proposing rather than to consider what you're proposing. Okay. Good. Jaco, I saw there was something else you wanted to ask, sir.
No, thank you. I just wanted to say thanks for the comments. I just couldn't get my mic unmuted.
Okay, sorry. Okay, fine. Moving on. All right. So I want to now deal with the pros of capitalization. Capitalization, this is not a communist versus capitalist argument. Capitalization is a verb for buying equipment. It is a description of a process of replacing people with machinery on the one hand, in other words, a fourth industrial revolution, or complementing people with equipment and machinery, which is the fifth industrial revolution. So capitalization is either in relation to the fourth industrial revolution, which is I'm going to replace people with equipment, or the fifth industrial revolution. And I like using the example here of Holland, because to me, everywhere you go in Holland is about this. It's about not replacing people with equipment and technology, but complementing how they do their jobs with equipment and technology. And complement doesn't mean paying them a compliment. It means adding the equipment and machinery to them in the workplace so that they can be more productive, they can be more efficient, but at the same time so that they don't lose their jobs. So your strategic decision as a business thinking about capitalizing is this: am I a fourth industrialized guy, or am I a fifth industrial revolution guy? Because it is going to be completely different in terms of the impact it is going to have on my workforce. Whichever way you look at it, introducing technology, mechanization into the workplace has benefits. Number one, I can run a 24-hour shift if I wanted to. And maybe I need 2 people for machinery and equipment maintenance rather than 50 people on each of those shifts. Don't talk about the costs for a moment. Productivity benefits. Well, if you look at error rates, if you look at throughput rates, there's no question that a mechanized, capitalized bottling plant is what makes amalgamated beverages that produce Coca-Cola, South African breweries that have to dump millions of bottles of beer because no one's buying them, what makes them as productive as they are is undoubtedly mechanization and capitalization rather than a labor-intensive workplace. Low error rates, productivity benefits, no question about that. On the downside of labor intensity is the very high cost of labor. Now, I needn't tell any of you who are currently covered by bargaining councils, but the vast majority of bargaining councils have now entered into multi-year recognition agreements, which says for the next 3 years, every year we're going to put wages up by average of 7 to 8% a year. And we're going to introduce some automated bonuses at the end of every year, or at least 50% of the bonuses being absolutely compulsory. There are very high costs of labor. I'll give you a practical example in the chemical sector, and specifically in the coatings part of the chemical sector. The bargaining council process has resulted in the average hourly rate for a person who's working in the chemical sector going up from 25 Rand an hour to close to 60 Rand an hour. And we've got a scenario where the Minister of Labour has been asked to extend that agreement to cover non-parties, which means that even those employers who were not at the table when that negotiated agreement was negotiated are now going to have to pay those rates if the Minister extends that agreement to non-parties, even though they want nothing to do with the bargaining council. So the point is, we have very high costs of labor in South Africa, comparatively speaking, anywhere in the world, quite frankly. We are the highest labor costing country in the world at this moment in time, relative, obviously, to productivity. On the one hand, we have multi-year agreements, meaning that trade unions don't even need to negotiate increases any longer. Employers, and in fact, believe it or not, the majority of those multi-year agreements have been at the insistence of the employer negotiators. Employers have agreed to automatic increases every year for the period of the agreement, on average 3 years, and then they renegotiate for another 3 years. Very high costs of labor. No industrial action in a capitalized workplace. Yes, sabotage, of course, but no industrial action. And I mentioned a little earlier, I spent the last 2 days in 7 different workplaces dealing with trade unions that are on illegal industrial action and strikes and work stoppages, etc. And I can tell you for a fact that industrial action is the biggest negative of this country for any inward bound investor, particularly when they see what's going on now as we speak in the time of COVID, when you would imagine that a workforce didn't use this opportunity, number one, to force employers to pay them more to work now. Number two, no social distancing whatsoever. And number three, found it opportune, because they were being egged on by the trade unions now, found it opportune to negotiate increases and bonuses above any previous agreements. In other words, completely bypass the peace obligation. So no trade union nonsense, machinations in the time of capitalization. The interesting thing is, and this might and before I move on to the next point, let me say this. One of the complicating factors is that we live in a country where we think we're capitalists. We think our country is a capitalist country, and yet it's run by communists. It's run by the South African Communist Party, and it's run by CASATU, and it's run by the ANC. CASATU and the South African Communist Party are controlled by the South African Communist Party, and the ANC, the predominant amount of ANC National Executive Committee members are SACP members. So that tripartite alliance is a communist alliance. It's a socialist and a communist alliance. And the reality is this, that it's not going to change over time. And remember that in terms of communism and socialism, there's no focus on productivity. There's no focus on profitability. The only focus is on very high labor rates, at bottom line, and benefits. So the irony is that we have a dispensation from the Department of Trade and Industry at the moment, which has very, very good supply side incentives, which are available through organizations like Business Partners, the Industrial Development Corporation, that encourage capitalization in the workplace, because remember that there's schizophrenia in the world. Schizophrenia in the world in the sense that governments are saying we need to embrace the fourth and the fifth industrial revolution on the one hand, but governments are also saying, well, we don't want job losses on the other hand. So our government is encouraging technology in the workplace, It's encouraging you to embrace the fourth and the fifth industrial revolution. It's giving you supply side incentives to be able to afford to buy equipment and pay for that equipment and have a certain amount of that subsidized by government, either through the tax base, tax deductions, tax holidays and things like that, or alternatively grants which are available from the Department of Trade and Industry, particularly for those companies which have higher broad-based black economic ratings than other companies do. So we live in a country where there is funding available, a lot of funding available for capitalization of the workplace or capitalization of new manufacturing workplaces to bring the manufacturing sector back to South Africa. And so I'm saying to you that at the moment, until the trade unions become woke and the South African Communist Party becomes woke to the irony of what a capitalized, subsidized DTI structure does to unemployment rates in the country, until that happens, you as businesses should be grabbing those opportunities to capitalize. One of the big factors in terms of capitalization is the obvious opportunity for retooling and rejigging. The idea that you don't necessarily need to train an entire workforce because you're changing the way you do assembly or manufacturing in your business. Whereas if it was a labor-intensive workforce, you would obviously have to train. You would obviously have to teach. You would obviously have to mentor and assess and performance manage people until such time as they manage to perfect the retooled, the rejigged workplace. Now, you do not have that requirement when it comes to a capitalized production process or manufacturing process. It's a case of redesigning, retooling, rejigging, and immediately being able to run a 24-hour shift immediately thereafter. Before I carry on, any question or any comment in this regard? Because I know it must eat at you that I'm even having this discussion with you. Some of these accusations I'm making against labor and against communism must be eating at you. But if it's your business and you own the business and you're a shareholder in the business, does this discussion make sense or not make sense in terms of your decision to downscale your workforce? Just some thoughts, guys. Any feedback from you whatsoever? Okay, let's move on. So, don't worry. The Communist Party police are not listening in on this session. All right. The cost of capitalization. Well, capitalization costs. There's no question about that. If you're a strategic CEO or a chairperson of a business, then you do a cost-benefit analysis. You say, what is capitalization going to cost me? And what are the medium, not short, what are the medium to long-term benefits I'm going to get out of capitalization? And can I risk those? Can I afford those additional costs? But more importantly, can I risk those additional costs in terms of raising the capital to afford the capitalization? So that is a very important consideration. So what are some of those costs? Well, certainly there are retrenchment costs. And I needn't tell you, but retrenchment costs on average are 1 week for every year of service for financial reasons. And then it becomes an art, not a science, in terms of what your retrenchment costs are for operational reasons. Because remember, for operational reasons, it starts at 1 week for every year of service. But if you are downsizing your workforce because there are better ways of running your business, and not necessarily only for financial reasons, then certainly it is a matter of mediation, negotiation, and arbitration. And you could find yourself being forced anywhere from 1 week for every year of service up to a month for a year of service, only because of the nature of the market, the nature of how long it might take to replace a particular position, how the employee got to work for you in the first place, and the fact that it's not a financial reason, but it's an operational reason that you're in fact engaging in the downsizing and the downscaling of your business. So there will always be retrenchment costs. And the big thing about retrenchment costs that never ever gets factored into the cost of retrenchment is the cost of sabotage as well. Because so statistically, the notion of a group of people leaving the workplace, but the group of people remaining in the workplace, that's your danger part. The danger part is not the people leaving the workplace. The danger part are the people remaining in the workplace, because they become a cost you have to factor into the process. If you're bringing people out of the workplace so that the people remaining in the workplace have to be more productive, be retrained maybe to use machinery and equipment, there is a certain resentment factor you need to cost into the process. And the reality is there is a high percentage of sabotage in the next 6 months after retrenchment has been completed. There is a high percentage of sabotage which occurs in the workplace from the people who remain behind in the workplace, not the people who've left the workplace. And this never gets spoken about, and it doesn't get acknowledged. From a human resource point of view, it is your HR people and your line managers that have to manage that sense of loss. You literally have to take those employees who feel guilty for having remained in the workplace when everybody else lost their jobs. You have to take them through a normal grieving process. Think about Elizabeth Kubler-Ross and think about the grieving process, and get them all the way through that grieving process to a state of acceptance. Not because I'm grateful for having kept my job, but I understand why I'm the person that's remained behind. There is a cost to that. And even if it's only an emotional, not a financial cost, and I'm suggesting it's a financial cost, but even if it's not, even if it's only an emotional cost, you need to factor in what resources you're going to need in your business to deal with that cost, ladies and gentlemen. Then, of course, there's the cost of the capital outlay. Now, the reality is that a business that pays cash for equipment and machinery is acting on principle, but does not understand the sound financial principle of leverage. The reality is that when it comes to capitalization on your workplace, while you should have to outlay a certain percentage of the cost of the equipment, you should never be outlaying the complete cost of that equipment. And yet I am astounded by the average CEO in the age category of 60 upwards, and I need to emphasize that, in the age category of 60 upwards, who will never finance a piece of equipment. He will not introduce that piece of equipment unless he can pay cash for the piece of equipment, or unless he can pay it off in a 6-month period. But he will very, very seldom leverage it and go to a bank, raise the money, or rather raise the finance to buy the equipment on the understanding that he will pay back over a longer period of time. He will never do that. And it's a point of ego. It's a point of pride rather than a sound business principle. So that capital outlay is a factor that needs to be considered. As far as the reconfiguration of premises is concerned, certainly with equipment and machinery and equipment, forget about social distancing, but there is always going to be a reconfiguration requirement. You have to factor into the cost of capitalization, architect's costs, organizational development costs, CNC, computer numeric coprocessor, planning costs, rather than necessarily you don't buy off the shelf programming for a CNC machine to cut a piece of wood into a chair or into a table or into a bookshelf. It has to be pre-programmed. So the cost of specialist setup, specifically your computer numeric coprocessor programmers for the manufacturing workplace, your IT programmers for, let's call it the data business or the information technology business, is always something you have to factor into in terms of the cost of capitalization and the cost of outsourcing as well. The one thing you do need to know is that where there's catch-up being played is that many government supply-side incentive programs, which are not based on funding equipment and improving the manufacturing process, there are a number of government programs which disincentivize labor replacement with equipment and with machinery and manufacturing processes. And so you need to understand that. You need to know what you're not going to qualify for in terms of government grants, as much as what you are going to qualify for in terms of aid and supply side incentives in this regard. Cost of capitalization, and I'm going to be dealing with it a little later in the course of this discussion, is also your triple BE status and your triple BE level, particularly when you consider that your new BE level is reflective of your past BE level. Your verifiers will compare the one with the other and compare the loss of labor in your business and how it impacts on a number of the criteria in the scorecard. But we'll talk about that in a little while. All right. So as far as your There's one person who sent me a private message that now says, we buy all of our equipment outright. Well, fantastic. But I do need to tell you, that's not a badge of honor. Very often that's a badge of stupidity, not stupidity, but it's certainly not a badge of honor. And I respect your right to do what you want to do with your own capital. But in this day and age, with what's threatening businesses, to use your loan account, to use the amount of money you've got sitting in a bank account to buy capital equipment will save you some interest, but it's certainly not a gearing mechanism for a company that's got a very good financial system in place. Okay, engagement challenges. Well, the first challenge is a Section 189 notification. You have to bear in mind, for example, as I've said before in some of these webinars, that Section 189 notification implies, ladies and gentlemen, that, for example, you cannot initiate a Section 189 process while you're laid off. You can only initiate it when people return to work. So the engagement challenge is Section 189 and what you regard as Section 189. And the basics of Section 189 is it has to be in writing, it has to give reasons, it has to give an opportunity for people to come back to you, it has to give an indication of what alternatives may be considered, etc., etc. There's a science to Section 189ing. Then there is a 2 to 4 week minimum period of engagement and consultation around the Section 189, where you have to, in fact, make people understand what opportunities there are in the Section 189 process to consider things like job sharing, reduced working hours, different shifts, etc., etc. And then a 2 to 4 week period of allowing people to come back to you with their ideas and their suggestions. And only after that engagement period, a duty to engage on your final decisions. If necessary, sometimes, especially if there's industrial action, you might need to get mediators in, and we've seen mediators come in from the CCMA or bargaining councils. Mediation is not a necessary process in Section 189, but it really depends on what your employees do to put pressure on you to cause mediation. But you're never, during a Section 189 process, going to go to arbitration. So it's mediation, but it's not arbitration. If a mediator of the CCMA or bargaining council signs a certificate to say, well, we've tried to mediate, but we've not been successful, they cannot go automatically to arbitration. An arbitrator will never be asked to make a decision as to whether or not you should 189 or not. So that's very, very important to consider, ladies and gentlemen. Then you might have a scenario where the trade union will refer your decision to retrench to the CCMA, not for purposes of mediation, but rather the CCMA have a layoff scheme, a training layoff scheme, which says that they've got enough money. Funnily enough, it comes from the Unemployment Insurance Fund, but the CCMA have a fund which is available for the retraining of your employees who are about to be laid off. And if the CCMA agree to fund the process, it will delay your decision to initiate a retrenchment in your business, either because the CCMA will offer to pay the person to remain in the workplace while they're being retrained, or, well, not or. So the CCMA will either offer to pay the person while they're being retrained in the workplace, and the CCMA will pay for the training as well. Or if you say, no, it's not going to happen in the workplace, the CCMA will have to pay that person some kind of a stipend outside of your workplace during the period of the training for the training layoff. The other factors you need to consider as an engagement challenge is, what is your mechanism going to be for deciding who gets retrenched? So ordinarily, invariably, in terms of good practice, not the law, in terms of good practice, which has become the law through custom and practice, something called the LIFO system applies, which essentially means last in, first out. So the youngest people to be appointed into the company would ordinarily be the first group of people that I consider for retrenchment at the end of a Section 189 process, except if they are young, if they are better school qualified, if they are more trainable, and if they have qualifications, which were the reasons you employed them in the first place, which distinguish them from some of the older employees where you would apply FIFO, first in, first out, because of age, lack or inability to be trained, or people who just don't have qualifications. So again, you have to be very discerning about whether you're using LIFO or FIFO or a combination of the two in deciding who's going to stay and who's going to go. And then, of course, you've got to distinguish between the cost of your operational reasoning versus the cost of your financial reasoning. But I've dealt with that already. Any questions about what's on this slide, ladies and gentlemen? Because I know, again, people say retrenchment is the cheapest way to downscale, but sometimes, at least in the short term, it's a very expensive way of downscaling. Any questions, any observations in that regard? Okay. Oh, yes, sorry.
Ivor, I've got a question.
Yes, Jaco.
I've got two people working for me. They're quite old. They're beyond 70 years. And because of this COVID thing, I obviously are keeping them still at home and supporting them when I can. But I mean, the inevitable day will come where I have to make a decision on what the future is going to be. Do you have any advice on what I can do there?
All right. So first of all, what does your company policy say?
Well, I've not restricted them to work until a certain age. It's
right,
actually a bit of a case where...
So you haven't got a company policy on retirement, right?
No.
Okay, so the law of the country basically says that the average application of a retirement age is 60 for a woman, now 62, and 65 for a man. Now, if they're over the age of 62 or 65, depending on whether they're a man or a woman, you're entitled to say to them that depending on your health, and for that we need an annual certificate of your health, but depending on your health, we will make a decision and we will give you a contract. It is essentially, I know I say this in many different instances, but I believe this is truly the last remaining opportunity for fixed term contracting in terms of labor law, where you're entitled to enter into a limited duration contract for a year at a time. Some companies say 6 months at a time, and we will reevaluate every 6 months or every year on whether or not we want to employ you. The bottom line is, if a guy is 70, you're entitled to say to him, look, the national age is 65. I've allowed you to continue beyond that to 70. You've been with us for 20 years. In this time, for economic reasons, I might owe you 20 weeks of payment, although I don't. If I'm asserting the retirement age, there is no obligation on me to pay you a retrenchment package. Although if you've been with me for 20 years, I want to offer you something. So instead of 20 weeks of pay, I'll offer you 10 weeks of pay. He can't take exception to that. There's certainly nothing that can be done at the CCMA. He can take you to the CCMA or the Bargaining Council on mediation, but you're not going to get to arbitration for a person who is 70 and has worked 5 years beyond retirement age in your business. But what I would say to you, Jaco, is put the bloody thing down in writing. Have a policy that says from now on, please note, the age is 62 for women, the age is 65 for men, or the age is 65 for everybody, doesn't matter. And then we reserve the right as a business at our sole discretion to continue with your employment on a 6 month by 6 month basis or on a year by year basis. But do not create rights beyond the age of 65 for those employees. I would urge you to understand that what I've just said. Do not create rights and entitlement. It must be completely at the sole discretion of the CEO and the managers of the business as to whether or not a person stays on or doesn't stay on. Doesn't mean you can be unfair to them. Okay, it doesn't mean you can try and dismiss them rather than assert the retirement age. There is a difference between the two. Because if you're going to dismiss them just because of their age, it becomes victimization.
Thank you.
All right, excellent. Absolutely. Nick, please go for it. Sorry, okay, Mr. Bloomberg and then Nick. Mr. Bloomberg.
Okay. Ivor, Murray Bloomberg, Sean's father. You've engaged with Sean previously and will no doubt engage further. I believe that I've understood very well what you've said, and you have placed some emphasis on capitalization versus labor intensity. Now, the question that I have is, what is the position when lockdown is lifted further and one is, for example, allowed to return the majority of one's workforce to work, but there is simply not enough work to justify having those people at work. What does one do with labor and payment of labor in that situation?
Thank you, Murray. So let me give you a two-part answer. If during lockdown, or what we're referring to as the recovery period after lockdown, and I'll talk about that in a little while. But if during lockdown or the recovery period, there is a requirement for you, there is a need for you, you can justify going on short time. In other words, you're going to reduce the working hours of your employees. You are entitled to do that. It's not a subject of a 189 process because of lockdown, and your employees are entitled in their own right, with their own resources and efforts, to get to the unemployment insurance fund with a letter from you to say you've reduced their hours. And there is an insurance policy. When you pay UIF, you're paying for a number of different insurance policies. One of those UIF insurance policies is specifically for reduced hours and therefore reduced income, and they're entitled to apply to the UIF for compensation for reduced hours and reduced time. It won't be for the full amount. It will be on a sliding scale, as with TERS. It will be on a sliding scale from about 60% all the way up to 38%, as is the case with TERS, that they will then be compensated. So there is a certain amount of compensation for those individuals, and you're fully entitled to say to them, because of COVID, either during COVID or after COVID, during a reasonable recovery period, i.e., we anticipate that the recovery period after COVID for our business is going to be 6 months. And therefore, for that 6-month period, we're going to start you on 50% of your normal working hours. And gradually, based on turnover, we reserve the right to increase it all the way up to 100%, either only at the end of the 6-month period or during the 6-month period. And you're fully entitled to do that. It's not a permanent scenario. However, if you engage during a normal time rather than COVID, if you engage in a Section 189 process, then either a reduction in a salary or a reduction in the wage rate, or alternatively, a reduction in working hours is certainly an alternative to retrenchment. It is the kind of alternative to retrenchment that a labor court looks favorably upon as opposed to retrenchment. And just remember that always, ladies and gentlemen, if you retrench one person, they can go to the CCMA or a bargaining council. If you retrench a group of people, they go straight to the labor court. All right, so that's the big difference. But certainly the labor court will say, we recognize that reduced hours in a justifiable scenario or situation, we recognize that reduced hours is very much a good alternative to people losing their jobs altogether. So I hope I've answered your question, Murray.
Thank you very much.
Okay, and then Nick, it's time for your question, sir.
How's it?
Hi,
Thanks.
Nick.
How's it? Oh, I'm just going to turn off the
echo.
Yeah, there we go.
Okay.
But could you please clarify the issue of the physically employees having to return to workplace before starting the 189 process? So in our case, many have not returned to work due to COVID issues.
All right.
And also,
so it's actually quite simple. If your employees are laid off, it means they're no longer your employees, because remember, you've adopted a no work, no pay scenario with them. So you have no hold over them as laid off employees. If you're subsidizing their salary while they're laid off, in other words, you're taking the TERS, but you're paying them a little bit more to complement it and supplement it, then it's a different scenario, because they're not effectively laid off, even though they're laid off in terms of how you're defining it. You are entitled to continue with your 189 process, but not initiate a 189 process. So at the very most, what you can do during the time of COVID is, during the time of lockdown, is continue with the Section 189 process that you've started before, if you have some kind of a trade going on with that employee. And a trade going on means not just that they've got a letter of appointment from your business, but that you're paying them something. It's not exclusively a no work, no pay scenario. You're entitled to continue with a 189 process, not initiate a 189 process. However, if the 189 process is because of COVID, is because of the lockdown, is because of the impact it's had on
Yes.
customers and turnover in the business, then you very definitely have to wait until a level 3 or a level 2 or a level 1 when you are entitled to open your businesses completely, or a level 4 when you're so if you're a hardware store, for example, if you're a hardware store, lockdown
Yeah.
is over for you, which means that the employees are back at work in one form or another, or even if they're at home because they're over the age of 60, they're back at work. And what that means then is that you're entitled to continue with the Section 189 process, which started before March, or you're entitled to initiate a Section 189 process. Remembering that a 189 process is not an event that from issuing a letter you can retrench the people. It is a 2 to 3 to 4 week process of negotiation and not negotiation, of engagement and consultation.
Okay. Cool. Thanks, Ava.
What's your second question, sir?
Well, the second question is answered by you because it was to do with the 2 to 4 week period referred to for the engagement. So you've answered that, because although we are allowed to go back, our customers are not, because construction's not allowed to be back. So we don't have all our employees on. We were supplementing their income up until the end of April. We're no longer supplementing their income, those who are not at work, until during May. So you've answered the question in that way.
Okay, good. Fantastic. Thank you.
Thanks.
Right. I've got a question here which says, what about precedence on the age subject? Rena, I have no idea what you mean. What about precedence on the age subject? Do you want to clarify your question?
Hi, how are you?
Fine, thanks, and you?
Okay, thanks. So if you're working in a company and people are in various ages over the age of 70, and they're still working and fine, and you put a policy in place now, no more over 65, what happens to those people, first of all? And second of all, if you don't put a policy in place now, and in 5 years' time, somebody says, okay, this is now the new policy, haven't you already set a precedent of what the age workability was?
So in answer to your question, we have one legal principle that trumps everything else, and that is that there cannot in labor law be a unilateral change to a basic condition of employment. So if the basic condition of that person's employment is that you let it go beyond 65 and 66 and 67, there was never a reference or a discussion to a retirement age, then there has to be an engagement and there has to be a negotiation, not a consultation. So negotiation on age in that instance will be, we're introducing a retirement age into this business. It is 65. We're then saying at the sole discretion of the company, we can extend that from year to year to year, and you need to give us a medical certificate to show you're capable of working. The reality then is, if the person says no, you have in that instance to retrench them. You have to say to them, well, then the alternative to accepting the change in our policy is we're going to have to retrench you. In that instance, you have to give them the option of taking a retrenchment package, which is one week for every year of service.
Awesome, thank you.
Good. All right, thank you. Yako says, can you still claim UIF for employees that return to work? You can't claim TERS. You can't claim temporary employee relief for employees who are back at work. But if you've reduced their hours, then they can claim compensation for the reduction in hours. Then Yako says, besides LIFO or FIFO, can you apply other criteria to select the staff members to retrench, i.e., productivity, work performance, commitment, attitude, and even gut feel? Never gut feel, but certainly you can apply performance appraisals, feedback, rewards, the result of counseling, the result of performance management, bonuses, etc. In other words, you're certainly entitled to say, this is a better worker than that, and therefore I want to keep this guy even though he's half the other guy's age, or rather he's double the other guy's age, doesn't matter. So you're fully entitled to break with LIFO or FIFO on the basis of credibility, on the basis of merit, on the basis of qualifications. You are the employer at the end of the day. And ultimately, it's your decision. You just need to be able to do it systematically, Jaco. That's very important. Okay, transparency. Now, if you use a financial reasoning, you will need to disclose your management accounts and your annual financial statements. You're entitled to use the following as grounds for justification, even in terms of financial reasoning: productivity, labor costs, downtime, increases in bonuses, and error rates. Those are the kinds of things that during a financially reasoned a downscaling of your employee base, you're entitled to invoke financial reasons for downscaling. All right, that goes without saying, and I have spoken about it. Now we come to the notion of who your engagement partners are. Now, engagement on retrenchment, engagement on 189. In a unionized environment, you can't deal with the workers. In fact, in a unionized environment, you can't even deal with the shop stewards. Your first port of call in a unionized, even in a partially unionized environment, is the trade union organizers. So that is why you need to nurture your relationship with those trade union organizations when times are good, so that when the times are challenged, like you needing to engage in retrenchment, there is a relationship. There's someone you can phone. There's someone you can ask to come to see you. There's someone, yes, you'll have the shop stewards with that person in your office. You never meet with them alone. But the reality is it's a one-to-one relationship with a trade union organizer. And you need to understand that in a unionized environment, you cannot make unilateral decisions. You cannot implement unilateral programs. You don't need to negotiate, but you need to engage and to consult. Critically important. Then the next step up is where there's not only a trade union, but there's a bargaining council. You need to inform the bargaining council that you've initiated a Section 189 process, which may result in retrenchments. Some of the bargaining councils have interventions, have programs, even have senior commissioners that they make available to see if they cannot facilitate a 189 process, which may not result in retrenchment, but rather result in something else, some other kind of thing that might put you in the same place as if, as an employer or an owner of a business, as if you'd retrenched the staff members. So it's very, very important that you understand that if you are unionized, you've got to talk to the union. If you're in a bargaining council, not only do you have to talk to the union, but you also have to talk to the bargaining council. In an environment where the CCMA becomes involved, the CCMA invariably is going to become involved because of the fact that there's no bargaining council, but also because of the fact that you've chosen to go to the CCMA as an employer and say to the CCMA, I'm initiating a Section 189 process. Will we qualify for a temporary layoff subsidy from the CCMA? Remember that the CCMA gets that money from the Unemployment Insurance Fund. It's automatically guaranteed to them. So, and very few employers seem to know this. If you're going to retrench your staff, make allowance for a time period for retraining, for the assessment of their competency and for retraining, because the CCMA has the funds and the money to pay for that activity. So use it. It's more of an inducement for your employees to accept that you're acting in their interests, even though you're retrenching them. Now, in an environment where there's an application to the labor court, the labor court essentially becomes your engagement partner. Now, there are some judges of the labor court who assume that they're in a position to arbitrate on retrenchment decisions or Section 189 decisions. They're actually not. They're in a position to arbitrate on whether you have been procedurally fair and correct, but not on the merits of your decision to downscale or downsize. So you need to understand that the scope of how a judge in the labor court is able to behave is limited to procedural considerations, not to substantive considerations when it comes to Section 189 or retrenchment processes. A judge is not set up to interfere in the financial or the operational planning of any business in this country. Very often trade unions will try and confuse the situation and try and convince the judge that he's got authority to arbitrate on substance, not on process. But he doesn't have that authority, or she doesn't have that authority. And so it's something that needs to be resisted with every inch of your being. Having said that, by then you will have been worn down by trade unions, and all you want is for this thing to go away. You see a summons to court, the labor court, it kills you. And that's what they're depending on. Always bear in mind, there is a limit to the discretion of a judge of the labor court. He's not allowed to arbitrate on the substance of your decision. He might think you're an idiot for having made the decision, but if you've been procedurally correct and fair, he cannot attack you or your decision. So you need to understand that. There's a question by Stephen. Thanks, Ivor. So by introducing an age of retirement and having a discussion with the affected staff, one can retrench based on age in essence. No, Stephen, sorry. By introducing a retirement age and having an engagement with your staff, if your staff doesn't want to accept that they're now on a fixed term contract of 6 months or a year, whereafter they must be bringing in a medical certificate, then you have to retrench. Or if you've allowed them to go over the retrenchment age and you've not done anything about it for 3 or 4 or 5 years, and then you want them to accept a retrenchment age, and then you want them to accept the policy that says they have to bring a medical certificate in every year, and then you'll only extend it by 6 months or a year, depending on what you agree to do, then you have to give them an option of retrenchment. But you want to try and do it in such a way that you don't necessarily need to retrench them. Okay. Essentially, you're right, Stephen, but I'm just saying there are certain circumstances where you would be wrong. Okay. Ladies and gentlemen, just generally, these are your considerations. So you always need to be fair to the individual, and you need to be consistent amongst individuals. Section 189, downsizing, retrenchment, is not a way of essentially avoiding having to discipline an employee or dismiss them. All right, so it's not an alternative to the performance management. You have to understand the individual fairness is based on financial and operational considerations, nothing to do with the individual who's going to be retrenched at the end of the day. You have to be consistent. What you do for one, you have to do for the others, given the same circumstances. You have to be systematized, which means you have to either use LIFO or FIFO or a combination of the two. You have to be non-partisan. You cannot have vested interest. I'm going to retrench all my Portuguese employees, especially the women. All my Portuguese women, I'm retrenching them. What the hell is that? That's a vested interest. It's got nothing to do with retrenchment. It's got to do with the fact that you don't like Portugal. As far as trainability and youth and gender, trainability, youth, and gender are certainly youth and gender, and even disability. Youth, gender, and disability are the politically correct, vulnerable groups in society. And if you want, you are fully entitled in your decision-making around retrenchment to make allowance for youth, gender, and disability as opposed to LIFO or FIFO. You're fully entitled to use those three groupings and to indicate it in your employment equity plan and your workplace skills plan and with your BBBE verifier as your priority areas to avoid retrenchment amongst those three particular groups of vulnerability. But certainly trainability and skills development is another factor. So those are your primary considerations in making decisions around retrenchment. As far as industrial action is concerned, well, as far as industrial action is concerned, you have to always distinguish legal from illegal. Illegal allows you to dismiss, you don't have to retrench. If you can bait your employees into a situation where they act illegally, if they go on an unauthorized illegal strike, if they start throwing rocks, etc., then that's one way of avoiding having to pay out a retrenchment package. I mean, I'm being facetious, but you understand the point of what I'm trying to make. If they're on legal industrial action, it means you've signed an agreement or you're party to a bargaining council that permits a certain kind of industrial action if they don't get what they want during a negotiation or an engagement, and there's nothing you can do about it. It has to see itself out. The one thing you have to be very careful about, and I'm seeing this at the moment in the chemical sector, is a trade union will take one company out on strike, and then that same trade union will force the employees of other companies in the same area, in the same industry, in the same sector, or who are suppliers or customers of that particular company, the employees of those companies to go out in sympathy strikes with the people who are currently fighting their retrenchments in your businesses. These are all pressure mechanisms to force you to fold and to reconsider your Section 189 processing. And certainly there's a huge amount of customer intimidation and client intimidation that goes on that you have to make allowance for in terms of the industrial action you could face during the time of 189. One thing I do want to say to you is there's very little respect in South Africa for what we call the peace obligation. Now, what the peace obligation says is this. If I am subject to a bargaining council agreement, or I've signed a plant-based agreement with the trade union, then on both sides, if I follow the procedural mechanisms in those agreements, and the other side embarks on industrial action, and that industrial action is counter the agreement. In other words, there's a mechanism in the agreement for dealing with disputes, but the trade union doesn't follow that mechanism, or the staff don't follow the mechanism, or the shop stewards don't follow the mechanism, and in fact, they just embark on a wildcat strike or worse, then they're not abiding the peace obligation. And so my language in dismissing them is, guys, there was a mechanism for resolving disputes. You didn't follow that mechanism for resolving disputes. You've broken the peace obligation. Bugger off. I never want to see you again. You're entitled to get rid of them under those circumstances. You've got to be very careful that there is no evidence or proof that you're marginalizing or that you're victimizing workers. Now, it's not hearsay evidence. It has to be proper evidence. But if they can prove that you have been marginalizing and victimizing them, then the penalties are severe, because now a labor court can rule because you've been procedurally incorrect. You've marginalized, you've victimized, you've not followed process. Now a labor court will say, well, we're going to invoke penalties on you as a company. You have to take the employee back, and we're imposing 12 months worth of salary as a fine or a penalty on you as an employer. So you just got to be very, very careful about how you're exposed. Now, you are entitled, as I mentioned to Murray, you are entitled for specific justification in terms of COVID-19. So how you do that is this. You look at the numbers. You do a financial analysis of what your trading looked like in an economy before pre-COVID, before COVID-19. You're entitled to anticipate what the recovery period for your industry or your sector is going to be. And it can be anything from no recovery, we can hit the ground running and be back where we were on average between last July and December, all the way through to, well, we're in the restaurant business. So even if we were to open tomorrow, people are not going to come and sit down and order food in our restaurant because of social distancing. So that could take anywhere from 6 months to 12 months to recover, to get back to where we were on average last July to last December, because that's the comparison period you're going to use as a COVID justification. So you're entitled to make allowance for why we're embarking on retrenchments in reference to the recovery period that you're anticipating and can justify. Just remember what I said a little earlier. If you're initiating 189, you can only do it after the return to work. RTW stands for return to work, not before return to work. Remembering that return to work doesn't mean necessarily that you get to a level 3, 2, or 1. It just means that if you're at level 4, it's the companies which are permitted to return to work under level 4. Then you can initiate a Section 189 if it wasn't initiated before March. If it was initiated before March, then you're entitled to carry on with that Section 189 process. If you had a disciplinary inquiry before COVID, before lockdown, you're not entitled to implement the finding of a disciplinary inquiry during lockdown, but certainly after lockdown, because you are allowed to return to work. After lockdown, you can continue with implementing the finding of that disciplinary inquiry. Just remember that if you're implementing it because of COVID-19, you have to engage with your employees on alternatives, And there has to be financial transparency. If you're alleging that times are economically tough because of COVID, you have to be prepared to prove it. Now, for those of you who are interested, I formed a very nice alliance this morning with a chartered accountant who specializes in financial modeling around retrenchment section 189 justification by comparing previous trading patterns with current trading patterns, the effect on your annual financial statements, and the effect on your management statements as well. So, and if you've got a chartered accountant modeling those justifications for you, even if it's your own chief financial officer, it's highly unlikely that they can be challenged or would be challenged to any extent whatsoever in any mediation forum or arbitration forum. If it can be justified, why it should be arbitration. And now, I suppose, finally, let's just talk about downscaling and downsizing in relation to broad-based Black economic considerations. Certainly, your verification agent has to look at your numbers last year when we gave you a level 3, and this year when you're applying either for a level 3 or a level 2. If those numbers have changed, which affects the profile of your business in terms of triple BEE, it's going to come back to bite you. But by the way, I'm going to run another webinar on when you should be thinking about making triple BEE sacrifices. In other words, maybe a level 2 doesn't do me as much good as a level 2 would in my own mind. So therefore, if I go to 4, how will it affect my business, and what compromises will I be able to reverse if I go back to level 4 as opposed to remain level 2? But that's another workshop I'm going to be running. But certainly, your year-on-year profile changes, you need to consider that. Your ownership changes in terms of the trusts you've created to justify your triple BE level, and who the beneficiaries are need to be factored in. So, for example, if you've got a trust in your business, if you've got a 26% trust or a 51% trust in your business, you are not allowed to make a unilateral decision to retrench unless you've taken it past the board of directors, the shareholders in the business, the board of directors in the business, and your trusts will in fact participate in that decision-making process. It's not so bad if it's a 26% trust because it's not a majority, but if it's a 51% trust, you've got a problem. You need to know that problem. You need to be able to navigate through that problem. I always say never form a 51% trust because you've discounted the value of your business by 49%. But that's a different discussion for a different day. Where you've got beneficiaries of a trust, and there could be hundreds of beneficiaries, it's not your trustees that are going to make the decision to support the retrenchment. It has to be the beneficiaries who make the decision to support the retrenchment in your business. It becomes slightly more problematic. You have to bear that in mind. The other thing you've got to bear in mind is the second element of your scorecard, which is your management control. Because if you're retrenching staff and they happen to be Black staff and they happen to be Black women, it's going to affect the management control profile of your business, and you will have diluted and therefore lost triple BEE points in that process. The same goes for skills development. But now we get to an interesting part of your scorecard, because procurement is very interesting when it comes to retrenchments. Because the reality is, if you're South African breweries, you say, okay, we're not going to retrench our truck driver. We are going to create a new business with that truck driver. We're going to stand surety for the truck so that he can drive the truck or own the truck. We're going to say to him that we're retrenching you, but we're not paying you a retrenchment package, because if I retrench you today, then tomorrow I'm going to give you a 3-year contract to make deliveries for me in your new business. And so you're going to be an enterprise that I'm developing. And then eventually, when I give you a contract for 3 years, you're going to be my supplier. And so when you understand how that machine, that fourth element of your triple BEE scorecard works, you can turn retrenchments into enterprise and supplier development opportunities and benefit in ways which can massively offset your losses under management control and even ownership control in that business. You just need to play the cards. You need to know the rules of the game. And the same goes for your social economic development opportunities. You can offset the one against the other. Very, very important you understand that game, ladies and gentlemen. And maybe we run a workshop specifically on understanding triple BE and how the scorecard works. All right. I realize that I have gone, I've gone 20 minutes over my time. I do apologize for that. I will put it down to everybody's questions rather than my rambling. But on the screen is the WhatsApp number you can get me on, 082-880-5316, and is the email address you can get me on, which is ivorb@arcconsult.com, ivorb@arcconsult.com. Any final questions or comments anyone wants to make? All right. Please feel free to email me with your questions and comments.
Sorry, Ava.
Yes, Delmarie. Hello, Delmarie.
It's Delmarie, actually, but any case.
I'm gonna call you Delmarie. Yes.
All right, you do that. I'm not going to complain, seeing that you answer a lot of my questions most of the time. The UIF coveters, I know it's still. What is going on there? Why is it not accessible at the moment?
Well, it's not accessible because the programmers who happen to live in a different country have not understand the precepts of what they're supposed to be developing or the design of it. And the system has crashed in many respects. It's crashed, for example, in being able to distinguish payments to an employer against employees. So while it's identified payments to an employer, it's not been able to distinguish on whose behalf, in which employees those payments have been made. It's severely compromised a number of businesses in that regard with their employees. And so they took that aspect of it off. And then more importantly, the reality is that their formulas in calculating what you should be getting back have not been working. And so they've had to go back to programming. Unfortunately, they've still not learned the lesson of bringing the programming back to South Africa. So they're working across boundaries and they're not allowed to meet face to face, obviously. So, and I'm not making an excuse for them. I'm actually saying that it's damnation for them that they're messing the system up. We anticipate that May should be open by next Wednesday, not this Wednesday, not tomorrow, but by next Wednesday at the latest. It could very well be before the weekend, but next Wednesday at the latest for consideration. But remember as well, you're not going to be required to reapply. You're simply going to be required to submit documentation back. Many of you will have already received a letter saying, please just select from the following 3 reasons why maybe you sent in a letter asking for variation or change, or we want to just confirm that you've not used the money we paid you for the wrong reasons. And even though the letter doesn't make sense, you basically have to select from one of the 3. If we paid the individual, it was an advanced payment, for example, against anticipating TERS. That will be fine. You just fill it in, you email it back, and at the moment, they will simply count the fact that you've emailed it back. They won't look at the substance of what you've sent back to them. So it's a complete an abomination. But that's because the Minister of Labour thought he could do this on his own, and people in the Department of Labour thought that they could get massive kickbacks from the programmers in the process. They might be getting the kickbacks, but they've certainly stuffed the system up for the country.
Okay, with that being said, that they've stuffed up the entire system, which I'm sure they have. Now I have to apply for because I've only got to apply for the people that haven't been returned or we have not allowed to return to work as yet.
So let's talk about that. Let's just talk about that quickly. So you're going to bring your people back in 33% tranches. So until they come back to work, they qualify. Until they literally knock on your door and come back to work, they qualify for TER. And as long as you follow that through, then the last group returning will get the most TER, and the first group returning will get the least TER when it's paid out.
Okay, but now, these are the following things. This is the following scenario. We're a very small business. We've only got 10, 11 people employed. We've only brought back 4 people because that's all that's affordable at this stage. And obviously I've got to claim for the other 7. And if they don't open up within the time so that I could submit for them, can I pay them like an advance, and then how do I prove to
All right. So let me answer the question in two ways. First of all, about a week and a half ago, the Gazette was amended to say that you're fully entitled to pay them advance, and then when you finally get payment, to set it off against what you've paid them. So that's now gazetted.
Okay.
It's law. But the other thing that was gazetted a couple of days ago is this. If you've tried and you've tried and you've tried and you've not been successful, you can turn around to your employees and say, guys, I've tried. I can't get TERS payment for you. And it's a no work, no pay situation. But the law now makes it permissible for you to apply. So we'll give you all the paperwork. You must apply in your own right. Go speak to the Minister of Labour, because as far as we're concerned, it's no work, no pay. So you're entitled to do that as well now.
Okay, but that just seems a little bit cruel, because a lot of them won't have access to, but then that defeats the distancing object again.
I don't know what you want me to say.
Sorry.
All right. I've answered your question. Don't embarrass me with your questions. Anybody else?
Sorry.
No, thanks for your question, Dominic.
Ivan?
Yes. Hello, Laura. Well, don't ask me. Ask Laura, Delmarais. Yes, Laura.
Question. If they're only going to hopefully open by next week, in terms of the payments, the calculators were not 100% correct. We're not sure what's going to happen. There's a lot of people now asking the question, if it comes to the 30th and they need to pay their staff, what calculations are they going to base it on?
Laura, I'm going to say what I said last month. If you deviate from a no work, no pay scenario as far as laid off staff is concerned, you are assuming the risk. You are taking the responsibility for the risk that you won't get UIFTR and therefore be able to recover the money. And majority of businesses are saying, well, fine, we accept that risk. But you're not going to be able to get the employee to pay that money back. So you need to know that that's your risk management strategy going in up front. Once you accept that risk, then you can work within that risk. But you need to know you take that risk upon yourself. So if you want to pay the person because they need the money and they're a good worker, then pay them. Where you assume the risk that you're going to fight for TER, but if you don't get it, that's the end of the matter. You're not going to go to your employer and ask for the money back. There are some employers who do it as an advance, and they have a document for repayment should UIF not come through. And you might want to do that. So it's absolutely up to you. But if you pay them and you basically avoid a no work, no pay scenario because you're going to pay them in some way or another, whether it's an advance or not, then you've set a precedent that you must be prepared to live with.
For the next 3 months, 2 months.
Well, the other thing is this.
Currently.
The other thing is this. As I said to you right at the very beginning, if you agree with my notion that TERS is a precursor to BIG, a basic income grant, then first of all, the lockdown will continue beyond June, which means they'll extend TERS beyond June. That's the first thing. And so you'll be entitled to keep your employees locked down until such time as COVID disappears, in my opinion, and they will get that money out of the UIF. I just want to come to Yolanda's question. Yolanda says, can we pay employees a percentage on sales instead of a basic salary? Yolanda, you cannot vary the basic conditions of employment of an employee unless they've agreed to it. So you can give it to them as an option where you say to them, we want you to come back on a sales basis and we'll pay you commission. But if you don't accept commission, then you remain laid off. So what I'm trying to say is you have to give them the choice of remaining laid off or coming back to be able to earn commission, because that's what your question is about. Good. All right.
Ivor, if I may ask a question, Stephen.
Yes, Stephen, of course.
I understand that to cash in people's annual leave is allowed if you then recover the money basically from the TERS claim, if I understand correctly.
Well, no. So you're entitled, Stephen, you're entitled, just to put that right, you're entitled to say this, that I have to pay you 10,000 Rand. From UIF, we're going to get 3,000 Rand back. And I'm giving you the option then of, for the 7,000 Rand, either accepting that it's no work, no pay, in other words, you only get 3,000 Rand, or we take 7,000 Rand from the value of the leave which you've got owed to you, and therefore you're cashing in on that leave for that amount so that you get paid the full 10,000 Rand. If they say we'd rather keep the leave, then it's simply no work, no pay, and you get the 3,000 TERS either as an advance, or you have to wait until TERS comes in, and then we'll give it to you straight away within 5 days.
Okay, so if someone is working at, say, 60%, but has 7 days leave due to them and wants to cash it in, whether or not you get the TERS back or not for that, the value of that 7 days, you can actually pay them out and advance them that money.
Stephen, if someone's working at 60%, you don't qualify for TERS.
Well, not TERS, the short-time UIF,
Okay.
sorry.
Right.
Yes.
So if someone's working at 60%,
which case doesn't cover.
if someone's working at 60%, they can cash in their leave. And then if there is still a balance that's left, they can go to the UIF in their own right and claim that they've lost income. Good.
Okay.
Fantastic. Thanks, Stephen. All right. Ladies and gentlemen, thank you all for joining me. I will upload the link onto the various sites of this discussion once it's loaded onto YouTube. And again, thank you for joining me. And please remember to use the cell phone number for WhatsApp, or either be at arcconsult.com should you want to ask questions. Thanks so much for joining me, and we'll chat